Let me quickly ask, are you in your 40s, 50s, or 60s and looking for some new ways to invest your funds in order to generate some monthly or quarterly income, but you're left now wondering, is it simply too late to start getting into investing, and have you simply just missed the ship on investing in your earlier age? Well, luckily, I'm here to give you some tips and strategies that you can apply into your everyday life regardless of your age so that you can generate some more income and ultimately lead a more financially enriched life. Hey, what's going on, investors and savers? I hope you're all doing fantastic. Look, I know February can be a really brutal month, especially up here in Canada. It's supposed to be like -20 in my hometown of Ottawa in a couple of days, but let's just stay strong and power on through it. If you're new to the channel, then welcome. My name's Griffin, and in today's video, we're gonna be looking over some different ways that you can invest your funds if you're an older individual. And I say older here, but I really just mean someone who's say 40, 50, or 60 years old, which is still super young in the world of investing. But I realize that a lot of my content is maybe tailored towards millennials, even though it can be applicable to a wide variety of ages. And I really want to tailor some content here to some older investors because I realize that there are a lot of older people who still want to get their hands dirty in the world of investing, and I absolutely applaud that. So here's the thing, I've actually had quite a few people reach out to me requesting this topic of investing for older individuals, and as I was thinking about the content and doing some research and ultimately just picking my brain as to how I was going to structure this content, I quickly realized that there were really two different ways that I could go about delivering this content. Option number one would be that I tailor the content towards older individuals who don't really have all that many savings or investments and are just starting out, or I could tailor it towards individuals who, again, are a little bit older but that have a fair bit of savings or investments, only in say the $50,000 or $60,000 range, including equity built up in their primary residence. And the reason why I'm mentioning home equity here is because millions of Canadians have over $100,000 of equity built into their primary residence if you've been paying down your mortgage over the years. And even though it could be a scary concept of thinking of utilizing that equity in order to invest, this is ultimately just home equity that is sitting dormant doing absolutely nothing, which you could absolutely put to better use by either investing it in equity markets or cash flowing real estate, which both can provide you with monthly income, which is really important moving into your older age. So if an older investor asks me whether or not I think it's a good idea to start investing even if you're in your 50s, to me, it's just an absolute no-brainer because guys, 40, 50, 60, that is still so young in the world of investing. You have at a bare minimum 20, 30, 40 years left of investing, and at the very least beating inflation, getting a steady interest return on your investments, and then also receiving either steady dividend or cash flow for the next 20, 30 years. And if you want to be even more hands-on and dirty with your investments, you can absolutely skyrocket your net worth and portfolio value. Trust me, I'm going to be that guy, 95 years old, sitting in my rocker, reading up on financial news, trading stocks, and closing deals all day, and you can too. So with that said, for today's video, I decided to go with option number two here, which is someone who already has a little bit more capital saved up and ready to invest with. But I want to first and foremost mention two things here. Number one being, if you identify as a person who is just starting out and really doesn't have all that much capital, then that's totally fine. And lucky for you, I have a bunch of content on my channel already, which is perfectly tailored for your needs. I highly recommend you check those videos out after watching this one. And then number two here is that regardless of your age, whether you're 12, 30, 50, or 90, the concepts we're going to be talking about in today's video are applicable to you. So sit back and relax and enjoy today's video. Now, before we go ahead and dive into today's content, we do have some matters to attend to. As you probably know, if you watched my last video where I announced a giveaway of 3 copies of The Intelligent Investor in celebration of this channel reaching 25,000 subscribers. Once again, thank you so much for supporting the channel and watching my videos over the past months. So I went ahead and read every single comment and picked 3 lucky winners, but do know that ultimately you're all winners in my heart. The winners of the book are CT, Sam Miracle, and Sam Thackeray. So if that's one of you, then make sure to either send me a DM on Instagram at Griffin Milks or send me an email to cointocapital@gmail.com and we'll set up sending the book straight to your door. All All right, so with all that said, let's now dive straight into two different strategies that you could deploy into your financial life if you have a little bit more capital saved up in order to generate some monthly or quarterly income. And the way I'm going to structure this here is I'm going to first and foremost go ahead and explain the strategy, what it is, how it works, and then I'm going to explain a real life example in order to give you a glimpse of the type of results that you could expect, because after all, what's theory without practice? So the first strategy that you could utilize as an older investor or someone who has a bit more capital on hand would be to deploy some of that capital into cash flowing real estate. But wait, before you go ahead and click away from this video or skip ahead, I really want you to hear me out, because I think the numbers are going to speak for themselves. Even though I know a lot more of my viewers are interested in stock market investing, I fundamentally believe that investing in cash flowing real estate can highly benefit your financial situation and your overall portfolio. The reason why I'm bringing up real estate investing, if you're a person who has some cash on hand, whether young or old, is because real estate can provide the investor with 4 different ways of building wealth and generating income. And if taken all together, those 4 different income generating properties can easily beat stock market returns and provide the investor with monthly income, which if you're looking to retire soon is just golden. Let's be real here. Number 1 is through debt paydown. So just like with your primary residence, every single month when you make a mortgage payment, a portion of that is debt and a portion of it is equity. However, with the case of a rental property, your tenants are paying you monthly rent, which if selected properly is going to cover all the expenses and the mortgage payment. And the reason why this is really important is because over the period of time where you hold the property, you're going to be building significant equity, and later on in life, if you decide to sell that rental property, you're going to get a massive windfall of capital gains all in one shot. And the reason why this is really important is because people who just have their primary residence, even though they might consider this an investment, if they want to materialize some of the gains of paying down that equity and market appreciation, you ultimately have to sell your property, which you might not want to do in your retirement. Number 2 is through appreciation of the actual assets. So just like with the S&P 500, for example, which is going to have an average annualized return of right around 7% on average, well, real estate is also going to appreciate year over year with an average of about 5% per year, depending on the market. And currently in my market, for example, of Ottawa-Gatineau, we're seeing some interest rates here of about 10 to 15% appreciation year over year. It's absolutely mind-blowing. Number 3 is through forced appreciation, where basically you're coming in and purchasing a property for under market value or that's being underutilized. You go in and make some strategic renovations and raise the rents, thus bringing up the actual value of the property and creating equity out of thin air. And by the way, if you want to learn more about forced appreciation and how home equity works, then I highly recommend you check out the video right here, which goes into detail on that topic. And finally, the 4th and last main principle of building wealth through real estate is what's known as cash flow, which is really what, as an older investor, you're going to want to focus on in order to go and generate some monthly income for yourself. So cash flow is basically when the rent received from your tenants exceeds the overall expenses of the property, including the mortgage if you have a mortgage on that property. And cash flow can either be used in order to fund more deals and ultimately create a little empire of real estate, which generates even more cash flow, or you can just use it for your day-to-day activities. All right, so I do realize that all this theory can be pretty boring, and ultimately you want me to show you a concrete example of how this theory can be applied to the real world. So let's look at an example of a cash flowing real estate property in my region right now. And let me just put this out there before someone down in the comments mentions the fact that this would never be possible in their market or region, because real estate prices are just way too high, and for this reason the barrier to entry is really high and cash flowing deals are hard to find. Well, you know what? This might be the case. However, nothing says that you need to invest in real estate in your market or region. So make sure that you're open-minded and resourceful and always on the hunt for really good deals that fit with your criteria as an investor, which could very well be out of market. So this right here is a triplex that's been for sale in my region for quite a few months now, and as of right now they were asking a market price of $354,000, but since it's been on the market for some time with some good negotiation, you could probably pick it up up for right around 330 or even a bit less, but for the sake of this example, we're going to be using $330,000 as the purchase price for this triplex. A 20% down payment on this triplex would set you back right around $66,000, and if with a mortgage of 25 years at a 3% interest rate, which is the going rate in my market currently, you're looking at a monthly mortgage payment of about $1,252. Other operating expenses on this property would be number one, insurance, which for this would be probably around $160, $170, and then following that, we also have the monthly miscellaneous costs, which personally, I like to put away $50 per unit per month in a savings account or just in the checking account that I use for that property in order to account for unexpected repairs. So here we have $150 per month. And finally, we have the taxes, which include school and municipal taxes, which this property right here has yearly municipal taxes of $4,226. All these expenses taken together set you back $662 per month for a total of right around $1,900 per month in total expenses, including your mortgage. Now here comes the fun part. Remember that this is an income generating property and it is a fully rented out triplex, which is currently bringing in $2,550 monthly, leaving you with a monthly cash flow after all your expenses and mortgage of $637, which you can either save up for another down payment or you can just use on your monthly day-to-day operations. Who wouldn't like to have $637 per month in your pocket? And remember that this is just the cash flow, so the actual liquid cash that this property is generating and throwing off every single month, but you also have to take into account the fact that you're paying down your debt. So in year one, which in terms of a mortgage is going to be your worst year or the year where you make the least amount of capital, you're going to be looking at $7,400 worth of equity built up. And then you also need to take into account market appreciation. So on a $330,000 purchase price for this asset, a 5% gain, you're looking at right around $16,500 in appreciation on the property. So all in all on this deal, if you consider the fact that you put $66,000 down and then let's say you had $4,000 worth of closing costs for a total out-of-pocket $70,000 invested in this property, well, just on a cash-on-cash return, so only the cash flow and not taking into account the market appreciation and the debt paydown, we're looking at a cash-on-cash return only of right around 14%. So I really hope that this simple example helped paint a clearer picture as to why I'm pushing my viewership to be a little bit more interested in real estate investing, because in my personal opinion, a well-balanced portfolio is not only going to have equities and fixed income, but is also going to include some real estate deals. At a minimum, 1 or 2 rental properties should do the trick. And at the end of the day, the content on my channel is to help you guys as investors make better returns year over year. And as we just saw, investing in real estate can really provide some hefty returns for your portfolio, especially if you're an older investor who's really going to start relying on monthly income from your investments. Cash flow is really unparalleled with real estate, and I highly recommend that you check out real estate investing a little bit more in detail for yourself. But what if honestly you're just not all that interested in investing in real estate and managing properties? You'd rather invest in stocks, bonds, ETFs, and REITs from your mobile phone on a brokerage? Well, to that I would say that that's totally fine. And for individuals who want to invest with a more hands-off and passive approach, this is probably the better way of going regardless, because ultimately there's a lot more passivity from your front and there isn't really anything to do other than pick and choose which funds and stocks you're going to invest in. Generally speaking, the golden rule here, if you're an older individual who's looking to build a portfolio for monthly or quarterly recurring income, as well as minimizing the potential for large fluctuations in the portfolio value that you have, you're going to want to focus on building a portfolio that is more heavily weighted towards fixed fixed income securities, such as, for example, bonds, ETF bonds, and GICs potentially, and then also have your equity positions much more focused towards not growth stocks, but rather dividend paying assets, such as, for example, dividend aristocrats or ETFs, which focus towards dividend payments, and or just broad market indexes, such as, for example, the S&P 500, which is going to expose you to the 500 largest companies in America. And this way, a portfolio such as this is going to minimize huge market fluctuations in the short term. The reason why this is really important for you as an older investor is because if you invest, for example, in growth stocks, yes, there is the potential that they will go up in value, but then there's also the potential that they could decimate a large portion of the capital invested in your portfolio. And this is something that we want to be a bit more conservative here and not focus our efforts towards huge gains in capital on the short term, but rather steady income that you could potentially live off of, or use at least to live off of in your day-to-day life moving into retirement. However, with that said, I'm still quite a bit more bullish on equities over fixed income, even if you're an older investor, because as we just saw, you can still tailor your equity positions towards dividend aristocrats or dividend stocks, as well as more conservative funds, which are going to focus on providing your portfolio with income. And these are typically going to be securities which are a lot less volatile than, for example, growth stocks. So nonetheless, consult with your financial advisor. But I have a bunch of stock videos about dividend stock picks that you can go about researching and building your own portfolio. And with that said, what you could do is build an asset allocation of, say, 50% equities, 50% fixed income, or even if you want to be a little bit more bullish, you could do a 60-40 equity split. A portfolio split that way could still be in line with your goals, even if you're an older investor. Okay, but what are some good investment options? Well, as I said, I myself am more of a conservative investor, and I like to focus my investments towards dividend stocks and dividend aristocrats that have a long history of raising dividend payments over time and not missing dividend payments. And then I also like to invest in solid real estate investment trusts, which happen to typically have a high dividend yield, and then also exchange traded funds, so ETFs, that are quite well diversified and have a long and steady track record to them. So this strategy typically is going to provide me with a 7 to 10% annual growth and right around a 4% dividend yield. So I really hope that this video has helped open your eyes and broaden your horizons as to the different investment potential that you have, even if you're in your 40s, 50s, or 60s, because after all, you still have a decade of investing ahead of you, and the best time to start is now. If you do want to learn more about how you can go about building your own easy dividend portfolio, then make sure to check out the video right here. And if you want to learn more about dividend aristocrats, then the video right here is what you're looking for. On that note, thanks a lot for watching, and thanks again for 25,000 subscribers. I have so much more content planned out for you guys to benefit your portfolios and your financial situations. So on that note, thanks a lot for watching, and I'll see you in the next video.